Welcome back to Talking Money with Mr. C on AM 760 KFMB.
All right, welcome back to the Real Estate Debate, making you smarter than everyone else. Co-hosting and judging today's show, Sean Cahan with Cornerstone Mortgage Group, is Sean. Tell us where the scores are at here through one segment.
Scott's in first place with 4 points. And then we have a tie for second between Melissa and Nate. And third place is Brian.
Oh, man. How many points do Melissa and Nate have?
3.
3, and Brian has?
2.
2? Okay, so Scott Ryan out to an early lead, got some bonus points with some great information.
Yes, he did.
It's time to head into hot or not so hot.
Time now for hot or not so hot.
So hot right now.
Let's find out if your neighborhood is heating up.
It's hot.
Or if your district is on the decline.
I am completely miserable, San Diego.
Well, see, I don't know if there's any markets like that at this particular time, but we will find out right now as we're starting the hot or not so hot segment where each contestant will tell us about a specific micro-market area in San Diego that they believe is either hot or not so hot. And then, of course, tell us why. Brian Daly, we're starting with you.
All right, thanks. Well, so my business, we go countywide, and we take snapshots of each individual submarket as we go when we're buying properties and when we're selling properties. So it's a little bit. I don't have the length of experience in one particular submarket to go off of, but I'm gonna go with tie it into the listing that I'm gonna present a little bit later. I'm gonna do South Park. I'm gonna call this the hot market.
Okay.
And reason being is as of at this time last year, they had 11 pending sales in that 92102 zip code, and 45 active homes on the market. Now, come to this point this year, we've got 30 pending sales at this time in March of 2015, and only 21 active homes for sale, down to a 1.4 months of supply in that market. And I think it's posed to do very, very well over this summer. We have this listing there, and we've been monitoring the listing prices over the last several months as we've gotten ready to list it, and we've seen price per square foot and prices in general just absolutely skyrocket over the last couple months. And, in South Park.
Huh.
So,
you think that's based on inventory? Is that what you said?
I think it's totally based on inventory, and it's a hot market in general. It's trendy, and sometimes. On the long term, some of those trendy markets I don't think are the best for value appreciation or for long-term value appreciation because they go up and down quite a bit. But I think for right now, for the short term, for the next, through summer, I'm seeing a lot of appreciation there.
Okay,
values go up.
All right, Brian Daly says South Park is on fire. Scott Ryan, hot or not so hot?
All right, in my business, I'm kind of back and forth between the coast and Scripps Ranch where I live. So I've been working the Carmel Mountain Ranch area, which is red hot. I've listed 3 homes on the same street, had the same plan each time, great marketing, broker caravan, 1 open house, reviewed anywhere between 4 to 8 offers on each of the properties, all within the first week. And I wish I had 15 more homes just like the ones I've had to sell, because I would sell every single one of them. It's been that I couldn't believe the demand. So it's that tapestry development. I think with all the new Nordstrom Rack and Saks off 5th up there, that whole Carmel Mountain Ranch Center. I love Scripps Ranch. They don't have the amenities that Carmel Mountain Ranch does, I tell you. The convenience of that area is really great. So that's a red-hot market. I'm going to tend to disagree with Brian's statement about that to me, the North Park, those trendy areas, Normal Heights, those areas. I was shown a buyer just last week or week and a half ago, and I couldn't believe what $600,000 got. You got 800, 900 square feet for these little tiny bungalows. So in my opinion, at $600,000, at that kind of price per foot, in those kind of areas where the surrounding areas might not be so nice in the future, it's going to take a lot to get me to buy there. So I think that's an area you need to be very wary about.
Too hot, you think?
Oh, yeah.
Good if you're a home seller,
yeah.
But maybe if you're a home buyer.
Because when the trend dies and the market goes down, those urban areas are the first ones to decline.
Yeah, and we've seen some pretty hefty declines in the past in situations like that. But as of right now, based on the stats, they're hot, but maybe too hot for buyers. Perfectly hot for home sellers. What do you think?
The buyer I had there, he's getting out of there. We're going to look at houses in Claremont and closer to the coast, more square footage, more space, so.
Closer to the water. Yeah, no, totally get it. Melissa Zavala, hot or not so hot?
I've got a market that would be hot opportunity for investors, but is not so hot for sellers and not so hot for first-time buyers. And that's the condo market in general, but specifically in Escondido. A lot of the condos over there don't have any FHA approval, so first-time home buyers can't get in. And of course, with FHA, those complexes, there's a lot of issues where they have to go through. For first-time home buyers, they've got to look at the HOA. Finances and all the stuff related to the HOA, CCNRs, occupancy ratios, the quality of the project, then if it's got nightly or vacation. So those first-time home buyers that would want to get into the market at the low end and the 100, 200, 250,000, even 300,000 and get one of these condos wouldn't be able to. And then there's issues even with conventional home buyers for those condos, which is like the most affordable way to get into the market, where they can't get in if there's litigation on the complex. Structural litigation on the complex. So it's a hot opportunity for investors because a lot of these things are great for cash buyers, but not so hot for sellers because their buyer pool is lower, and not so hot for first-time home buyers.
So the condo market in Escondido.
Yes.
So financing issues and just basic inability for normal people to buy those has caused prices to go down.
Normal people.
Well, not investors.
Yes.
Sorry. There's investors and normal people. Didn't you know, Melissa?
Yeah, so when you said hot, I was thinking, what does hot mean? But this is a hot opportunity for a certain kind of buyer, but not so hot for a traditional first-time home buyer or someone that wants to get in and live there, resident. And it's not hot for sellers, just for the reason I already expressed. They really got a much smaller opportunity or buyer pool that's going to be looking at their units.
Yeah, and I would classify that. I would call that a not-so-hot market where there's opportunity. So Sean Cahan has a question. Are rents good?
What do you mean by you mean are the rents low?
Yeah, are the rents still good
Is
even
the
though it's hard
return
to
on
buy?
investment?
Yeah.
Well, you can get such a good deal that the ROI would be there.
Okay. All right. I think that's what he's looking for. This guy pulls the trigger all the time on stuff like that. Just FYI, if you have any in mind. Nate Robinson.
Okay. You ready for me?
Yeah.
Okay. It's sizzling. We don't want it to say hot. I want to say sizzling. And the micro area that I'm talking about is Bressi Ranch.
Bressi Ranch.
Bressi Ranch in Carlsbad. Love it, love it, love it. Average days on market right now, 14. Okay. Price point, $1.1 million. Our absorption rate used to be 3.83 for the last 12 months. The last 6 months it's at 4.4. So the absorption rate is just continuing to decline, and there's only 11 units right now available on the market. Have 7 pending. Bressi Ranch is the place to be if you want to sell. It's the place to be if you want to buy and you want to move in. It's close to Alga Norte Park. It's close to the beach. It's close to shopping. It's just the place that most people want to go. So it's sizzling.
$1.1 million average rate?
$1.1 million average.
In Carlsbad, and it's that hot.
It's hot. Sizzling. It's not hot. It's sizzling.
It's sizzling hot.
Correction.
So are people getting more than list price?
Yeah. Well, for the most part, it looked like these homes are selling about 101. So like just about 1% higher, and we've been up 8% in the last year. So I just love this market. I love the timetable, and it's a great place to be. And I live really close by. I can't afford to live there right now, but it's a great place to to have a family grow.
I'm sure Sean can help you find $1 million. That's what he does. Well, this is awesome because I actually have a chance to talk about what I consider to be a really opportunistic market, which is not so hot of a market if you're a seller, but it's really opportunistic for buyers, and that's downtown. This is the one market that I've been scoping for years. I've been paying very close attention to this market, and where there are certain places that were on the edge of downtown that are now in the middle of downtown, like East Village, the west part of East Village near the ballpark area. This part of downtown used to be the very edge. In other words, you're 1 block away from a row of homeless people, okay? Now you're many, many, many blocks away. That's all been pushed out much further. There's huge developments going out in the East Village area, but prices in that area have gone down in some buildings, which makes no sense. Some of these buildings are in pristine condition. There's no litigation in them, like M2I, for example. You can get on the 7th floor in M2I, and we're talking 17-foot ceilings, for hundreds of thousands of dollars less than at the peak of the market. So where other areas of San Diego are kind of near the old peak of the market, certain buildings in downtown, Park Terrace is one of them as well, right across the street from Petco Park, where you're seeing the same prices for square footage as we have for the past 3-4 years. So that there's a ton of opportunity in downtown. I know a lot of people still think downtown is what it used to be. It's not. It's totally different than if you haven't been down there in 3 or 4 years, which some people say to me when I talk about downtown. It's completely changed. Totally changed. In fact, if you haven't even been to Petco Park this year, that's completely changed. The whole dynamic of what happens for baseball games has changed. It's not your old Padres. And I think one of these years, the Padres are going to go, they're going to make a run. They may not win the World Series, but they're going to make a run. And when that happens, it would be an awesome trigger, an opportunity to sell for a big profit. If you're an investor and buying one of those properties to rent out, or if you just want to buy a little second home to scoot down there for the weekends, I think it's something that a lot of people should look at that aren't right now. And that's the reason why the opportunity is there. All right. Anybody want to disagree in 30 seconds? All right, coming up, it will be time for Agree or Disagree, rightfully so, right here on the Real Estate Debate. We'll continue to make you smarter than everyone else. Stick around.